This is a race to financial freedom. In the red corner, we have a single stock, for example, Apple. In the blue corner, an entire basket of stocks, aka an ETF. Which one will make you richer in the long run? Let's decide, stocks or ETFs. What beginners should really pick? First things first, what are we racing for? If you're a beginner, most likely you're looking for growth. Maybe you have some money saved and want to start investing, put it to work, watch it grow over time. Well, then there's a lot to consider. A lot. Do you go for steady growth, or do you chase big gains? Well, let's see how these two racehorses perform. Stocks, also known as equities, represent ownership in a single company. When you buy a stock, you're betting on that company's future, its ability to innovate, disrupt, and grow. Big gains are possible, but so are big losses. What happens if that company fails? Your wallet feels it. The good news is, if you pick a solid company with a great track record, your investment can grow nicely over time. ETFs, on the other hand, are a basket of many stocks, aka a portfolio. By spreading your money across different companies or sectors, ETFs offer a way to instantly diversify your investment. Instead of putting all your eggs in one basket, you're putting them in many baskets, reducing the risk of a single company going bust. ETFs often have lower fees, provide professional management, and allow you to invest in a variety of assets like stocks, bonds, or even alternative investments. Okay, so we know the basics. Now let's compare growth vs. stability, volatility vs. steadiness. Maybe a meter leaning towards ETFs. For beginners, they're often safer, especially broad market ETFs like the S&P 500 or total market funds. These track major indexes, giving you exposure to the entire economy. Broad market ETFs have historically delivered solid long-term growth with less volatility than many individual stocks. However, if you're a beginner who enjoys doing research, studying companies, and can handle the ups and downs, picking a few individual stocks might be rewarding. Just remember, more reward often means more risk. Before you pick your horse, here are a few things to consider. Check your investments, costs, and fees. Usually, ETFs are cheaper per trade and management. Consider your time and attention. Individual stocks need you watching the news, earnings reports, etc. Your risk tolerance. Can you sleep through a 20% drop in your portfolio? Your goals. Are you investing for growth, income, or retirement? Pick accordingly. So which one will win the race? It depends on your personal circumstances, investment horizon, and goals. Ultimately, both stocks and ETFs can be part of a well-balanced portfolio. And the best part, you don't have to choose just one. Want more no-fluff investing tips that actually help beginners? Hit subscribe to Cashlyhood. Like this video if you're leaning toward ETFs. Share if you love stock stories. Comment below which you prefer, stocks or ETFs. Let's make finance less scary together.